Hey traders, what's happening? Jamie Setley here. It is July 28th, 2020, Tuesday. Last video I did, we dove into sentiment regarding the US dollar and um, sometimes fading extreme sentiment on stuff like that can be great, and sometimes it can be disastrous. Over the last couple of days, the dollar has continued to weaken. Today, more or less a back and fill day. However, that's, sentiment is but one part of the picture, right, of the puzzle. So in order to trade correctly, you need good entry spots as well. Well, fast forward from last week's sentiment piece, and we're going to look at a number of dollar crosses here. Well, this is DXY, and then a couple more dollar crosses, and also silver, because that's been obviously just crazy in the news with what's going on there, as it should be. I think last week was the best week in 40 years or something like that. But here's DXY, right? We are on the trend line from 2011, 2014. Okay, big spot. That's kind of all you need to know. If we go to Euro, here's that chart. Euro is on its 2008, 2011 line, right, which crosses through some really, really big levels here as well. If we zoom in a bit more, you will also see that the 618 for the euro decline from 2018 until this March is actually about 118.20. And then you've got the high from September 2018 there, as well as the high from June 2018, about 1850. Now keep those levels in mind, because we're going to look at some volume charts here in a second that are going to reinforce the importance of those levels, okay? So very close, not quite to the level yet, but very close. If we look at Aussie, this is a channel from the 2011 high. All right, channel nailed the low. You can see all the importance on the center line. And the upper channel line is about 72.15. Okay, so those are the three that we're going to look at. I will also look at silver here in just a minute. But let's look at these volume charts for FX that I promised you first. All right, so forget all the other crazy colors on this chart. Just pay attention to the volume weighted average price lines that come from major highs. In this case, we're looking at euro from the 2018 high. I guess really actually should probably have it on 216. Okay, so if you have it on 216, we've actually already hit it. Okay, 216 is the actual high here from 2018. So that level's been hit. In other words, we hit a major volume weighted average price. If I go to dollar index futures, I'm going to put that back on 216. You can see we are just slipping just below it. I actually have a volume reversal day here today, interestingly enough. So I will talk about that in my update in a bit. People say, like, well, how, volume weighted average price like this, how could that, alert you of anything when it's that long term? Well, it's like, for example, if I were to put in, say, a volume weighted average price from back here in May of 2014 and that big turn, let's put that in there. So that would be 5/8 2014. The first touch on that was pretty darn good in terms of being support. And actually, since then, it was actually support, resistance, support again. So, there's no like time limit on these things. It's kind of common sense, right? I mean, this is a big low down here. So let's go to, oops, hold on. We're going to look at the Aussie dollar as well. Aussie dollar, volume weighted average price again from its 2018 high. We're right on it. We've been on it for like a week. New Zealand dollar, volume weighted average price from its 2018 high. Again, we've been on it for about a week. And this was really important actually for much of 2018 and 2019. So bottom line here, point of this video is that, yeah, sentiment, we've covered that, right? But we covered that last week. But now we are, into legit price levels based on volume weighted average price levels, longer term, as well as some of these long-term trend lines and fibs. And what I also want to show you now was the silver chart. So this is silver spot. Silver futures are going to be pretty much the same, but you can see that we've actually hit the 38.2 retrace of the decline from 2011. Happens to be, by the way, really, really big price levels from 2011 and 2012, right? Zoom in on this a bit, and you can see, I mean, that is one heck of a candle right there, right? It's no joke. So, the fact that we've hit this, and I'm going to go to another volume weighted average price level, weekly chart here from the 2011 high, that's been hit as well. So you take the combination of these, I guess what you'd call more classic, technical tools like trend lines, fibs, etc. Throw it in there with some VWAP stuff, and then of course the sentiment that we talked about last week, and you really got the recipe, I think, for a pretty, a decent, fade on these things. I mean, you might think I'm crazy, but that's okay. So that's what I'm thinking. That's where I think the trade's at right here. Could get run over. That's what risk control's for. But yeah, willing to kind of take a stand. Okay, again, that's it. Jamie Setley here signing off, and good luck.